Good afternoon, everybody. My name is Heidi. I'm from National Flood Services. My co-host today is Sandy Emerson, also from National Flood Services. And in our presentation today, we're going to take a look at some of those topics that are sometimes often referred to in basic flood courses, but not a lot of time is spent on them, or some of those topics where they're just really not talked about because they're just a little bit more complicated than your shorter webinar sessions can really accommodate. So we're going to concentrate really on those particular items. Kind of as we look at our objectives, I'm going to ask Sandy to go ahead and launch our first poll, and this kind of helps us get to know you just a little bit. So in our first poll, we're kind of getting to know which of the terms describes your flood knowledge. Do you have basic flood knowledge? Do you consider yourself intermediate? Or are you in the advanced section? Sandy, how are our results coming? Sandy's having trouble unmuting her phone. Hold on. How about now, Sandy?
That should work.
There we are.
There. Sorry about that. We look like we have pretty much everyone answered, so I'll end it now. And we have a pretty good split here. We have quite a few intermediate people on the phone today. So we have a few basic and a few advanced. You got a pretty good spread there.
Good. Well, I'm hoping I'm going to impart some information for those who are in the basic area, those who are in the advanced and intermediate. So I hope I check all of your boxes. If you have any questions at any time, please go ahead and type that question on our chat line. Sandy is manning our chat line today. I can't guarantee we're going to know 100% of the answers 100% of the time, but Sandy's pretty quick at research, so we're going to certainly cover as many as we can. We can do it online. We can also do it just via the chat line. Because of the size of our presentation, I have muted your phone line, so certainly take advantage of the chat. We should hopefully have a bit of time at the end to also kind of clear up any questions that you might have. At the end of tomorrow, pretty much, typically, you're going to receive an email that's going to have all 3 sessions that we've had this week with some recordings and some documentation for you that I think you're going to find helpful. Our presentation is going to be for educational purposes only, so I will not be assigning any continuing education credits. So in our session, we're going to start by looking at those terms, CBRS, CBRA, and OPA. We're then going to move into some terms that typically come up when we're talking about rating, which is provisional rating, tentative rating, and submit for rate, and what those mean. And then we're going to look at page 2 of the elevation certificate. So let's start by what's often referred to as COBRAs. We talk about COBRAs sometimes, and I know that you've heard us refer to that. But there are a couple of terms that go along with COBRAs. One is the Coastal Barrier Resources System. And this is really an act that Congress and the Department of Interior actually created to help protect and conserve wildlife areas, to conserve fishing areas. So these are going to be marshlands, typically coastal areas. And they want to set aside those particular areas so that there's not development on those areas. And once these areas were established, it really prohibited any federal expenditures or any type of financial assistance for residential or commercial development in those particular areas. So the act itself is called the Coastal Barrier Resources Act, and that was created in 1982. Also created in 1990 they're called otherwise protected areas. You'll often hear those referred to as the OPAs. So the Coastal Barrier Resources Act of 1982, in order to be eligible to have a building constructed in those particular areas, first, that structure has to have a building permit that was approved and issued prior to October 1st of 1983. So if that building permit was issued at that time, a structure could be able to go ahead and be built in one of those protected areas. That structure also has to be walled and roofed prior to October 1st of 1983, and it cannot be substantially improved, which means that the improvements, the cost of which exceed 50% of the market value of that structure, excuse me for coughing, also cannot be substantially damaged, which means it has had significant damage. Again, the cost of which equals or exceeds October 1st of 1983. So as long as that structure was started before that time, then flood insurance would be available in those particular areas. However, if that structure is built after these areas were set aside, the community should not be allowing those structures to be built, and if it was allowed to be built, then flood insurance would not be available after that time. Again, really trying to eliminate the touch of man in those particular areas. So then we talked about the Coastal Barrier Improvement Act. So once time gone by, they continued to do some studies. NFIP decided that, you know what, we probably weren't quite aggressive enough, and we didn't set aside quite enough areas, so they added some additional areas to those CBRS areas. They also had some areas that they deleted from those areas, so that's really what that second act did, and they amended it. So properties had a one-year grace period. So that act was enacted November 16th of 1990. So in order to be eligible, they have a one-year grace period from that. So as long as that building permit was issued prior to November 16th of 1990, construction, again, it has to have walls and roof before November 6th of 1990 in order to be eligible. Again, cannot be substantially improved or substantially damaged. So I know the next question is going to be, well, how do you know if you have an area that is going to be in those particular areas? A couple of places to look if you are dealing with one of the CBRS or your OPAs. And also, these are some of the acceptable documentation when you're working on an application for a structure in these areas in order to be allowed to write that flood insurance policy. Community officials are aware of those areas that are in the set aside in that wildlife area. So they will have a list. So if you have an insured that is working on a policy, one of the forms of documentation is simply a letter from the community official indicating that that specific structure is not in the CBRS or that otherwise protected area. So Glenda might have a single-family structure. Let's say that it was built October 1st of 1990. Glenda can go to her community official and say, yes, we do have your CBRS in this particular area. However, Glenda's property at 555 Corporate Drive is not in that designated area. Also acceptable is going to be a letter from the U.S. Fish and Wildlife Department. Again, a simple statement stating that that particular property not in your CBRS or your OPA. Other documents that agents also have access to, and some insureds have access to these as well. One is the elevation certificate. By looking at your elevation certificate in Section B, a couple of questions. Is the building located in a coastal barrier resources system or in otherwise protected area? And it says yes. And then your surveyor is going to put in your designation date. So the structure has to be built in that correct time period that we talked about. Your flood zone determination certificate also has a section that talks about your OPAs and your CBRS areas, and that's going to be in section C of your zone determination. So all of those are areas where you can see those. Sandy has put in a fact sheet that FEMA has established about these particular areas into our chat line. So if you have some time, you can go ahead and look at those particular items. So anytime we're talking about a COBRA, an OPA, the underwriter is really referring to that area that's been set aside where development is going to be prohibited. And what that underwriter is looking for is when was that structure built compared to when these acts actually came into being. So that's what they're looking for when they're talking about those two specific terms. Now we're going to move kind of in that rating section. There's a couple of terms that are often referred to when you're taking your basic flood classes, but they're really not explained. One is provisional rating. The NFIP does allow a flood policy to be put into place if the elevation certificate is not available. So the policy is put in place, and it allows time for the policyholder to then submit the elevation certificate. So the rates are not based off of the information from that elevation certificate. Typically, your rates for a provisional rated policy are going to be significantly higher than what is on the elevation certificate. I can't say 100% of the time, but a majority of the time your provisional rated policies are going to be much higher because the NFIP is putting a policy in place without the information from that very critical elevation certificate. The NFIP does expect that the elevation certificate will be completed and submitted within 60 days from the policy effective date. So it's just giving a little bit of time in order to retrieve that elevation certificate. If the elevation certificate is not submitted and it's not obtained, what will happen is that that policy is going to be reduced in its coverage amounts so that it matches the premium that's submitted. So the underwriter is going to take a look at the provisional rates. They're going to calculate how much coverage can be obtained for the amount of money that was submitted. So if the policyholder submitted $1,000, and with the elevation certificate, that $1,000 should have been $200,000 in building coverage. However, the rates were double what it should be because they didn't have the elevation certificate. The underwriter is going to reduce the coverage for whatever premium amount that they have. Your provisional rated policy can be used in your new business whether or not your 30-day waiting period is applicable. So, for example, if Karen had a mortgage and Karen's mortgagee said, you know what, before we can close, you have to have a flood insurance policy. But Karen's property was in AE flood zone and Karen doesn't have an elevation certificate. To make the mortgage company happy, Karen can have a provisionally rated policy put into place, giving her a little bit of extra time to go ahead to obtain the elevation certificate. Sounds great, doesn't it? However, there's some things that you should know, and we're going to talk about that in just a little bit. So not every single structure is going to be eligible for that provisional rated policy. Provisional rates are going to be available for new business risks. It's not going to be available for renewal terms. That structure also has to be post-firm. Post-firm structures are typically those structures that are going to need your elevation certificate. It's required if it's in a special flood hazard area. Also, that property has to be located in flood zones beginning with the letter A. That's going to include AE flood zones, your A numbered, AO, AH, your A unnumbered, in a community that does have a base flood elevation. We're going to learn when we get to page 2 of the elevation certificate that not all communities establish that base flood elevation. So there's quite a few restrictions for those provisional rates. Also, only available if it is a 1 to 4 family residential structure. Your provisional rate not going to be available if your structure is a commercial structure. Excuse me. So agents, here's what we need to know. Your provisional rated policy cannot be renewed, and you cannot rewrite that policy. So a provisional rated policy is a short-term solution to getting that policy in place. It cannot be renewed, so it's not a permanent policy type. Your premium for your provisional rated policy is typically not a good premium. So the policyholder is going to get very little coverage for their buck. Also, here's the most important thing, that in order for a loss to be paid, that elevation certificate has to be submitted. So while a provisional rated policy is available, it may not be one of the best solutions for the policyholder. Typically, they have higher premiums. They cannot be renewed. The policyholder still has to obtain the elevation certificate, and that loss cannot be paid until the elevation certificate is available. So I'm going to go ahead and see if Sandy has any questions, and if she doesn't, she can go straight to our poll question.
No, we don't have any questions as of yet. And we've got something, here we go. Getting the second one up there. In true or false, typically the policyholder will pay higher premiums for provisionally rated policies.
Trick question, seeing if everyone was paying attention.
I got a funny feeling they were.
Listening to my scratchy voice today.
Got about 61% that have voted so far, so we're getting there.
I can see that most people are answering correctly. If you answered true, you were paying attention. Yes, typically your provisionally rated policy is going to have higher premiums, and it has higher premiums because the NFIP cannot rate using the information from the elevation certificate. It's called a full risk rate. NFIP not terribly fond of putting a policy in place when they don't have all of the information at their fingertips. So they're putting those rates in blind. Another type of rating, very similar to provisional rated policies, it has some of the same similarities, is called a tentative rated policy. While a provisional rated policy is put into place when the elevation certificate is missing, tentative rated policy is put in place when not all of the underwriting information is submitted. An example would be a structure that's elevated and that has an enclosure. If there's no documentation or information on that enclosure, the policy can be put in place with the tentative rates until that underwriting information is obtained. Very similar items that you need to know as an agent that we talked about with our provisional rated policy. As we talk about with tentative rated policies, the premium is going to be calculated. The premium, once the underwriting information is not submitted, is going to be reduced for whatever the premium is, and an endorsement to increase that coverage is not going to be allowed until whatever underwriting information is going to be submitted. That policy cannot be renewed until the underwriting information is submitted and full premium is received if enough is not submitted the first time. Your tentative rates also going to be higher than a lot of your actuarial rates if they had the underwriting information. Again, NFIP, not fond of rating a policy when they don't have all the information. Also, a claim cannot be paid on that particular property until that policy is rated with all of the information. So your provisional rates, your tentative rates, I look at them kind of as our Band-Aid. It's really going to stop the bleeding. It's going to suit a very specific purpose, but it's not meant to be permanent and a permanent solution to that. So the last category in our rating section is submit for rate, and there's always a lot of mystery and concern every time we mention the terms submit for rate. But submit for rate is not a bad thing in all circumstances. Submit for rate simply means that there are some very special, peculiar things about the specific property that doesn't lend itself for our regular pre-programmed rates. It can't be calculated automatically. These are properties that sometimes are not built in compliance. They're built out of the ordinary, something that is unique to the NFIP, and the NFIP wants to take a more in-depth look at those specific properties. So as the term signifies, submit for rate is really submitting information in order for an underwriter to rate it manually and to rate it by hand. So in our slide, we have two different houses. The one on the left has its living floor that's elevated above your base flood elevation where your flood risk is. Those are typically going to be your pre-programmed rates. You can put it in on your flood system and you're automatically going to get a rate spit out. The house on the right has its lowest floor below the base flood elevation, and it's not compliant. And depending on how far that lowest floor is below the base flood elevation determines if the NFIP has to take a closer look into those specific properties. There is some documentation as the underwriter is taking a look that might be requested. I can't say it's going to be 100% of the time, but in a lot of the times, these are some of the items that the underwriter is going to ask for. Of course, they need the completed application. Also, an elevation certificate. Your submit for rate properties have that lowest floor below the base flood elevation. So the NFIP wants to look at the elevation certificate to determine how far it is out of compliance. Also, a letter of statement or variance. And simply put, this is just a statement from the community officials explaining that, yes, they did allow this structure to be built out of compliance and kind of why they allowed it to be built out of compliance. Also, some recent photographs. Typically, in your standard rated policy, an underwriter is going to request 2 photographs. With these unique structures, more photographs are going to be collected. So it's going to take photographs of that unique area. So let's say that it has an enclosure that's below ground by 10 feet. Going to want some photos inside of that enclosure, outside of the enclosure, what's the foundation, how many floors are in that structure. Also going to request what's the square footage of that enclosure that's below your elevated floor. Also an elevated building determination form, and that's just indicating what is your building elevated by. Is it post, piles, piers? Is it elevated? Does it have solid perimeter walls? If you're working with elevated buildings specifically with submit for rate, the underwriter is going to be looking at the square footage of the enclosure, or if it's a garage area, they're going to want to know the square footage of the garage that's below the elevated floor. Going to look at what that particular floor is used for. Is it used for storage, or is it finished space? Is it living space? Also, is there any machinery and equipment in that particular area, in that enclosure? And if there is machinery and equipment in that enclosure, what is the machinery and equipment in the enclosure, and what's the value of that machinery and equipment in that particular area? Also, some information, a statement from the applicant or applicant's representative that the enclosure was built at the time the building was originally constructed. So this particular enclosure was in the plans from the start. It was built in the start, instead of having a structure that was elevated and then later enclosed completely. If you have your post-firm elevated building, again, that elevated building determination form, some information about that particular enclosure. So just because you have a submit for rate does not, again, automatically mean higher premiums. Sometimes they're not higher premiums. It's just a deeper look into those types of structures. You can also have a submit for rate for a structure that does not elevate it, that does not have an enclosure. Basements, for example, can also be kicked off into submit for rate, especially if it has a lot of negative elevation. In that particular case, a list of any machinery and equipment in that basement area is going to be needed, again, along with the value. Or if you have a post-81 V zone. This is a structure that's built in V zones, which stands for velocity that was built after 1981. If you have a structure that's not elevated, that's not compliant with the rules of the NFIP. So an underwriter is going to look at those specifically. They're going to look for anything that's obstructing, if it's elevated in any manner, if it's sitting on a slab. They're going to look at what the elevation is, because they're going to take a deeper look because it was not built in compliance. Doesn't mean higher premium, just means it wasn't built in compliance. A couple of other types of structures that you could expect submit for rate and some additional documentation. One is high-rise condominiums. A lot of times if you're sitting on the 20th floor, policyholders will often say, I don't need flood insurance, it's never going to flood up where I am. That is a common misconception. It's still at risk of flooding, and the underwriter has to take the entire structure into account when they're working with these types of structures. And so the underwriter is going to look for structural plans. They're going to look at where the base flood elevation is compared to where that specific unit or condominium is. They're going to want clear photographs, again, of the foundation of the structure, of the entire structure. They're going to want a list of any machinery and equipment that's below that base flood elevation. Maybe there's a car garage at the bottom and there's an elevator. How much is the elevator equipment? There's also something called hanging floors. When you're looking at a hanging floor is, it's kind of what the name kind of describes. It's a floor that's hanging that's not necessarily attached specifically. It's not a load-bearing wall. Typically, these also don't go all the way to the ground. It's just kind of cosmetic. Or if you have a partial enclosure. Pictures of the interior and the exterior of the lowest elevated floor are going to be needed, the size of that particular area, the value of any type of machinery and equipment that's also listed in that specific area as well. You'll see a lot of hanging floors kind of in Florida. Sandy, do you have any specific knowledge and information you'd like to share with us about hanging floors?
Mostly where I had seen them in my travels have been up around the Outer Banks, in the V zones along the Outer Banks. A lot of times there's some contractors at times that will mention that they can get around the flood requirements by doing the hanging floors, and that would be the one thing I would want to mention, is that there is no getting around that even with a hanging floor or a hanging wall. It's still going to be considered an obstruction to be factored into the rating.
And then we have our finished or unfinished subgrade crawl space. A crawl space means that there's less than 5 feet between the bottom floor and the next higher floor. So Sandy could stand up in those crawl spaces. However, I could not stand up in those crawl spaces easily. Or subgrade crawl space just means that you have that crawl space where it's less than 5 feet between the two floors, but it's no more than 2 feet below ground. That's what makes it a crawl space. Typically not usable family areas. What's going to be needed in that particular instance is some pictures of the interior crawl spaces. If there's any machinery or equipment in those particular areas, I've often seen furnaces or air conditioners placed in that areas. What is the value of that equipment? Any questions before we kind of go into our home stretch and talk about the elevation certificate, Sandy?
Yes, we have a couple up here. Miranda asked a good one. Would a hanging floor be a balcony area? And Roy actually answered before we got to it and said, yes, Miranda, it's an upper balcony area that doesn't have any supports underneath it.
Thank you, Roy. Roy was quick.
We have one more. Glenda asked, does the value of the machinery change the rate?
The value of the machinery and equipment doesn't necessarily change the rate unless you're dealing with a flood zone where we have a V zone. For V zones, because we're dealing with water that has velocity, any type of machinery or equipment very honestly become projectiles, and they can do quite a bit of damage. The machinery and equipment, NFIP wants to know what's down there, what are some of the things that they can expect. Is it a furnace? Is it a hot water heater that's in those particular areas? So just because you may or may not have machinery and equipment in those areas doesn't mean you're automatically going to have a higher rate unless you're looking at a V zone. In a V zone, it makes a difference, yes.
And
Any
that's
additional?
it.
Okay. With that
I got you before you said that.
I know. You're in my mind, my crystal ball. With that being said, we're going to talk about our final topic of our webinar today, which is the elevation certificate, page 2. Yes, did you know that the elevation certificate has a page 2? It does. And there are some important things on that page 2, and it's not something that we talk about every day in our webinars. So one thing that's on page 2 is there's a spot for your surveyor in order to put some additional information about the structure. So always look for that page 2. There's some helpful information in there. For example, if there's an air conditioning unit, the surveyor might put in that box, there's an air conditioning unit that's placed on a pedestal that's attached to the side of the structure, but it's above the base flood elevation. Important information to know. It's information that's not typically provided in the boxes on page 1. Also in page 2 are sections E, F, and G. The NFIP has a couple of very specific flood zones where the policyholder or a representative of the policyholder can go ahead and complete the elevation certificate in that section themselves. That is only for AO flood zones or A unnumbered flood zones that do not have a base flood elevation established. So in that particular area, the insured can complete that section themselves. And quite literally, the insured is going to go out with their yardstick, measuring tape, and they're going to take a look at how much room is between the living floor and where the ground is at. And they're just going to fill in the blanks in that particular area. This does not mean that every flood zone that the insured can go ahead and fill out the elevation certificate themselves. It does not mean that. Only available in zones AO and A unnumbered that do not have a base flood elevation. And the measurements and the boxes that need to be filled out are right on the back. The NFIP does have, or they used to have, some tutorials in that particular section, how to fill that out. Can also call customer service, and they can help if there's any questions in that particular area. And whoever completes Section E gets to put some information in Section F. So the NFIP wants to know who was it who completed Section E, what is their address. They need to sign it, date it, and place their telephone number, so if there's any questions, they can be contacted. I don't see those particular zones a lot, but it does happen only in those particular sections. Can they go ahead and complete those? Section G is reserved for your community official. And this actually makes me smile. Typically, Section G is used when your community official is copying information from an elevation certificate that's already been completed from a surveyor, licensed engineer, or a licensed architect. I cannot think of any scenario why that would happen right at the top of my head, but it is something that the NFIP does allow. So if it's the community official who is doing that research on those elevations from the elevation certificate, they would then put the information at the top. They're going to put their permit number that allows them to do that as a community official, their certificate, and then they're going to go ahead and sign it at the bottom. There's a section at the bottom that they're going to complete that. So that's actually what Section G is about. Any questions? Sandy, do we have any questions that I don't see that you see?
No, nothing at the moment.
Okay, I'm going to have Sandy go ahead and put up our final poll question, which is actually a survey. I really request that everyone complete this particular survey. It does have 3 questions. It does help us kind of make sure that these particular sessions are helpful and that you find value of them. If we get a whole bunch of people that say it wasn't of value, then we know that we need to not do this particular session again. So it's very helpful if you provide the information for us. And again, this is just totally anonymous. We don't call you back and ask why you didn't give us that very beneficial. But while you're doing that, I do have some resources that I think you're going to find helpful. One of them is the nationalfloodservices.com website, and this is a website that's continually changing. A lot of different resources are being put out on this website. There's marketing information out there. There's some videos out there. Tons of videos on any topic you probably may want are going to be located out on the National Flood Services, so if you have time, check that out. Also, if you have a moment, sign up to receive NFS communications. No, we're not going to sell your email address. You're not going to get a lot of spam. What you are going to get is some helpful information. So information on the NFIP. We'll send out NFS is going to send you the webinar schedule so that you can go ahead and see what webinars are coming up. So it's not going to spam you. It's not going to be a ton of emails, but it's going to be some important emails.